Hello everyone. Today I'm going to make a video about confluence. And confluence is actually multiple time frames moving in the same direction. And basically I'm going to show you what I compare and what I have open during the trading session. Today is December 17, 2022, and it's 8:13 a.m., 8:14 now. And 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 we're going to discuss about this topic that I normally don't touch or talk about it, but it's really important because that would allow you to, um, it would allow you to maintain the trades longer. Okay, so let's get it started. Before that, let me remind you to subscribe. This week until I think it's Tuesday, I'm gonna validate that and I put it in the description below. There's an 80% discount on Apex, so take advantage of that. Yes, I get a little bit of kickback for what you for if you subscribe. It's enough to get me a couple of coffees. So it would be good if you use the link in the description below. Also, there are some other links that you can check, like the access to the Discord channel or the Discord server, and Top Step Trader, which I think that it has also an additional discount during these dates. So okay, so let's get started. So confluence, the definition of it is when you have higher time frames or higher or anchor charts moving in the same direction as your entry chart. My entry chart is in ES is the 4. So it's let me open it. It's 4. Let me open it here for you so you can look at it. 4, 10, 20. So that this is probably the most important one, which is the reversal. So the reversal for me tells me that if it doesn't go in the if it doesn't continue in the direction I want, then that tick is going to be that amount of ticks are going to be important. So that means that if it reverses 20, then I'm probably going to be out of the trade. It's enough money to lose in per contract in one trade. So for me that would be okay. It's within my limits. This is the entry chart. The anchor chart for me, it could be different than this one. I use 8, which is double the size of this one. So let me open it so you can see it. This one is 8, 20, and 40. Now you can modify this one and make it a little bit smaller, up to you. I use 8, but you can use 6 also. On this, and these are the charts that I do have. So 2, 4, 8, and 16. But you can have on this one, you can have for ES, you can have the size of 6 or 7. It's just to give you a direction on where it goes. All the indicators for me are the same in the entry chart and the anchor chart. And obviously you do have the 30 minutes. I'm not gonna talk that much about the 30 minutes, other than saying that it is also I also look at confluence in this chart and where it moves. So if you have a move like this in the anchor chart, that move there, you're going to see this one. I believe that this is this move right here, from here to there, that move right there, and then this is the move right there. So if you see the move trigger in the anchor chart at this level right here, in the 30 minutes right there, and in the entry chart right there. So that is the entry. Now the problem on this one is that it happened at 2:13 at 3 a.m. 3 a.m. So probably nobody was or there were people that were looking at it, but this is an Globex session, so very nice move in the Globex session. I was not looking at it. So direction there is bearish overnight, and bearish right here, and bearish in there. Now, what do we see after a big move? Normally a period of consolidation. So I do have here all the way through 9:30 a.m. and you see that initially this move here was after this move there was a consolidation in this area here. So market started to move, to make up and downs, up and downs, up and downs before the market opened. Now, do we know where the market is going to go? Well, not. We have no idea what the market is going to do at the open. What we do know is that there are some important levels that we want to watch. So first of all, we can see here that there's a previous low that it's important there, that it was broken during the overnight session right there. But now this level here becomes resistance, okay? And in the lower side, we do have S1, which is the support one here. Support, the first support line, and then we have the mid support. So we do have or the pivot point is up here. So those are the levels that we are kind of watching. Also, I do have the VWAP. VWAP is always a target, and sometimes, most of the time, there's a good possibility that if the market goes into the VWAP, it would find a congestion area or a bounce. Okay, so then obviously can continue, but this one is a magnet. So you see here in this setup, or in this in this setup, there is an entry there, right? There's in this area here. I'm sorry. In this area here, there is a break out of a reversal. So there's a reversal breakout there, but there's not much space in between the VWAP and this breakout. So it's a kind of risky to take. Okay, so in here you see that in the anchor chart, if we go a little bit there, there's a lot of congestion. So indicators are not are saying that there's a lot of resistance above the price, right? Let's continue to see what the market did. And yes, sure enough, market opened, and first target, or the target of the previous low was met almost to the tick, and then came back down. So market is still in congestion. There's some confluence right here at the beginning of the market, but then you see that found the same in this area here. It found the same resistance in there, right? So okay, I stopped the video a little bit because I wanted to put this cursor highlighter. It makes it easier for you guys to follow the chart. So basically, there's a still there. We are here in a resistance, and it came back down on the price. So we are still in compression now. Still in compression. You see the power of the previous high. So what happened here is that people are trying to break to trade the break to the upside, and then but it found resistance. So it's better to wait a little bit and see if the market does something like this, and then come back and then continue the price there. So you can take either this one or you can take the second entry. That would be probably a little bit more secure. So there's a break there, came back down, another break, and came back down, and it's really not doing that much. Now what we see here is another thing. You see that there was a move from this high to this low, and this area here is kind of half of this area here is kind of half value in between this high and this low. So this area here, it's a 50% retracement. So and also we do have now a new box. So what I do is, before the market open, if I see a big move, then I identify the compression area, and I draw my range tool, which is a Fibonacci, and then I put right here. I'm looking at this high there, and in this lower high right here, and then I'm gonna connect these two dots right there. And then in the lower side, I'm gonna see, I have this one, I have a double top, and I have another double bottom, and I have another double bottom here and another double bottom there. So it seems that it's a good area to put a level of support in this area. So I have levels of resistance, levels of support, and these are my extensions. Okay, so this area here in a range market, and we are in the range now because of this move. We are within this big retracement right here. So if I'm in this zone, I would be looking for reversal shorts, but my strategy really doesn't allow me to trade to trade shorts unless my my indicators are also in confluence. So that means that they are going to be the price is going to be below the moving averages. In this case, it seems that, well, we're not in the red area anymore, but it seems that we are breaking to the downside at this point. Okay, so I see that level there, and I can draw another box right here, right? I'm gonna put it right there because of that high and that one. If this one breaks at this point, then I would consider to enter the trade. Okay, so let's see if we are in confluence with the higher or with the anchor chart. And basically, yes. So what we see here is a bounce off of the moving averages moving down. And in the 30 minutes, if I can move, I don't think that I can move this one that much. Oh yeah. So this is what you would see. But then on the next on this candle, you would see that in this 30 minutes, there's a low right there at 38.90.75. Okay, so that is the low of this candle. Now the next candle for me to consider entering would be below that wick that you see down here. So below this wick is where that I would consider to take the trade, because that means that this move to the upside is confirming and moving to the downside. Now in the 30 minutes, what I see here is that there's a trap for bulls people are thinking, okay, this one is going to continue going to the upside, and it actually fails. So you see that there's the formation is that, then come down and then up, and then the idea is that this one is going to continue, but if it goes below that line, it's going to fail and come down. Okay, so and it's also in a critical level, so 39.90 95 is kind of like a 39.90 or 38.90 is kind of like a critical value. So confluence, let's go back to confluence. So you see that the market is correcting here, is forming a bear flag as well, but it's moving down now, and then made some attempts to go to the upside, 1, 2, 3, and it failed, and now it's coming back down in the anchor chart. Okay, so I'm gonna prepare to enter the trade. So what I do is to, go there and put. Oh, I don't have it activated, but what I do is to put a stop sell order below these levels here, and see if I'm correct on my appreciation. I see this. There is confluence with a higher time frame, still above the 50 SMA, but I'm willing to take the risk on the break of this, because you have higher highs and higher lows until this moment where you have a lower high off of that one, and then you can have a lower high as well. So you have a lower low right there, and you can have a higher low. But I'm looking for a lower low in this point here. So putting my order right there and then moving down. Okay. So now what I'm looking for here is this level below, and I'm willing to keep the trade, because there's a level that it's important here, right, which also coincides with the S1, and then with this low right there, that pivot low. Okay, so yes, confluence in this, and if you see, let's go back to this chart. Yeah, it's moving down as well, and then keeping the trade. There is a bounce there, and you have a nice entry right there. So trade, this is two targets, or one target and a runner. So the entry would have been right there, and it's risky because you are still in the confluence, but you are in the upper side of this resistance, or now support, but it was resistance here. Now it's support down, or it is support right here, and it broke the support. And if you see, there's a wick that tried to bounce there, that could have scared you on the trade right there, and then could have scared you to the trade. But if you put your stop above that one bar, then you would be okay moving down. Now what happens here? Market continues moving down, right? So the direction of my anchor chart is to the downside still. So I'm still looking for shorts. We are below the moving averages. We are below the cloud also in the anchor chart. And then in the 30 minutes, the next bar is breaking that bar there. So it's moving to the downside. Okay, so now what I see here is that, okay, I'm inside the congestion area, and we are kind of half there now. There was a bounce. You could have taken this one because it's breaking also to the downside, but still you have this level here, 38.71.75, that could represent some resistance. So you some support. So you can, and also the momentum indicator is all the way down here. So you could either take it or wait. It is riskier than this break here, right? Okay, now there was a little bounce, and then there's another entry, and this one I like. Actually I took that trade and this trade during the session, so this one I like here. We're in the bearish mode in the anchor chart, so we are in confluence, and then momentum is also in confluence with the move, and I see here another push back to the downside. So then your entry would be right there, and then you have a break, and now you're in the sold area. So you have one target met, and then one reversal if you didn't take your second target out when it was kind of like moving or trying to resist in this area. So yeah, you see the market so that is what I wanted to discuss with you today. So confluence is the synchronization or looking at same direction in the anchor chart, the higher time frame or anchor chart on the 30 minutes, and also what your entry chart is doing. Now you see that there is some congestion after that. We are in the oversold area already, kind of. There is some resistance here, so if the market was chopping there, my expectation was that it was going to continue chopping right there, and that was the action during the morning. Now in the afternoon, it found some level of support here, and the market has started to go up, broke the VWAP here, and if you see from this point to this point, also you are in the same confluence. Now the problem on this one is that you are below the moving averages, and you are trying to break to the upside. So it's actually not market is still trending to the downside. So it was trying to recover, but it is actually against the moving averages in the anchor chart. Okay, so that is what I wanted to share with you. Topic for today was confluence. Thank you so much for watching.